Hello and welcome to Finextra TV's Thought Leadership Series. I'm Hannah Wallace, and kindly calling in from Dubai today is Conor Colleary, Vice President for Oracle Financial Services. Hello Conor, thank you very much for joining us today.
Hi Hannah, nice to be here.
Yes, it's been a while since we last spoke to you, so it's good to have you back on Finextra TV. Now, today we're going to be talking about virtual account management, and it's safe to say virtual accounts is by no means a new concept, but it's become a real buzzword in corporate banking, saying that it does have a few varying perceptions about how it's defined. So let's start there. How would you define virtual account management?
Well, first of all, you're absolutely right. It's not a new concept in corporate banking. It's been around for quite a long time, but it certainly has a new lease of life at the moment, and has become very popular with a lot of the customers we're talking to. I think historically, virtual account management looked at specific elements of virtual accounts like reconciliation or virtual IBANs in isolation. And I think if you went to different bankers, they would have different perspectives about what virtual accounts means. For us, in its essence, virtual accounts is about more efficient management of cash for your corporate customers. And it's actually covering all of the different use cases from a holistic perspective across all of the requirements that your corporate might have. And our approach and our view towards virtual account management has been to be flexible and to look at the most comprehensive way for banks to help their corporates manage their cash and liquidity in a way that leverages new technology and gives them a kind of a better experience with a comprehensive set of features and functions and use cases.
Okay, well, what are the factors driving the evolution of virtual account management today then?
Yeah, I think if I divide the driving factors into two sides, so on the banking side, there's probably two or three big driving factors. So first of all, delivering better and new services to their customers. Digitization is demanding a lot of enhanced experiences for bank customers. And at the same time, the customers are demanding new services from their banks. Mm-hmm. And this leads to retention. If we've done a survey that says 80% of corporate customers would be willing to leave their main banker for better services or better experiences with the bank. So that's one side of it, is really kind of customer retention. And at the same time, as the globalization and more companies become more and more international more quickly, the requirement for virtual accounts has exploded. So there's a lot bigger market segment to go after. So that's very interesting for a lot of our banking customers. And I think finally, as they move into digitization, at the same time, they need to increase automation, and they need to really think about how they can be more cost efficient and quicker at delivering the virtual account business use cases that customers are looking for. If I go to the corporate side, they have a similar problem. I think first and foremost, especially for larger corporates, they need simplification, right? They have potentially hundreds of accounts across the globe with multiple different banks that are incredibly difficult for them to have visibility on and to manage effectively. So they're looking for a way to simplify that whole ecosystem of accounts that they're managing. At the same time, they need to manage costs, because the more physical accounts they have open, the more expensive it is to maintain those relationships, and the more expensive it is to do things even like KYC. I mean, we estimate KYC alone on a new account is about $60, right? So, you can think of hundreds of accounts every year that need to be done. And then finally, I think they also need to be able to react quicker, right? So they need to be able to manage these accounts themselves. They need to be able to do it in real time, and they need to have much better visibility. Two other things that are more generally, I think, that would affect both. One is the impact of faster payments and real-time payments. So it's turned liquidity management on its head for us. So now liquidity management also needs to be real-time. You can't have overnight kind of changing of positions if your transactions are getting put through straight away. And it also puts a much bigger focus on management of and forecasting of your cash and liquidity positions going forward.
Okay, well, taking all of that into account then, it'd be great to hear your predictions for the adoption of virtual account management in this emerging new world, especially with the mounting pressure on capital and the urgent need to manage it more efficiently.
Yeah, so I've been looking into the crystal ball a little bit. I think there is going to be a big swell of interest in virtual account management. I think it's going to expand from just being the kind of realms of large, complex corporates that are global in nature. The market segment is going to become much larger, so the target market for banks is going to become bigger. There's also going to be a lot of new services, and in fact, innovation in the space is very interesting. We've seen customers that are looking at things like just-in-time cash management. They're looking at event-based cash management. And the technology is now there to support that kind of innovation, whereas before the technology was pretty rudimentary, and everything was kind of done on kind of basic cash management principles. We're also seeing, some use cases in marketplace economies. So people like Uber using virtual accounts to manage payments for their drivers and stuff like that. So that also is another use case that we see. And I think a final one that's being used is digital wallets. So again, using virtual accounts to effectively manage digital wallets is another interesting one. So lots of new business areas coming through. That's going to be very interesting. And we're seeing new use cases come up as we engage with customers. It's kind of like the art of the possible on the business side. At the same time, the technology has got much better. So, digital is becoming mainstream. I think it's the new frontier for corporate banking. It's going to transform the way banks interact with their customers. We're looking at a much more frictionless engagement. We're looking at self-service and a much more transparent view of the customer's position with the bank and across all of their virtual accounts. And then finally, when I look further, I think machine learning and AI is going to start playing a role in the cash management space. When I think about what it can do for the forecasting, allowing people to use machine learning and algorithms to really do a much better job of forecasting their cash positions going forward, and even modeling cash positions based on potential future events. Again, I think machine learning and AI will play a big role in that.
Well, someone we've spoken about AI and machine learning at arm's length is David Bannister from AITE Group, who I understand you're going to be joining on a webinar with on virtual account management. Can you tell us in the run-up what you're hoping to get out of the webinar?
Yeah, so I think for us, dig into in quite a bit more detail in some of the topics we touched on today. So what's happening in the self-service space, how the digitization of virtual accounts and the digitization of the customer experience is changing. We also see the digitization of the banker experience evolving a lot in virtual accounts. I think we'll also look at open banking and how that impacts virtual accounts in terms of the whole PSD2 and open banking that's happening all over the world. Definitely real-time payments and what that means from a liquidity perspective, and how that's changing the landscape around liquidity and cash management. I think we'll also explore, I touched on one or two interesting new use cases. I think we'll hear from David, hopefully, a lot of new use cases around virtual accounts and what kind of innovation people are doing in the market. And then I also think we'll dig in a little bit more detail on what's possible in the future with new technology. I mentioned AI and machine learning. I think robotic process automation will play a part as well in terms of increasing automation. I think there's great possibilities going forward for virtual accounts.
Certainly some exciting developments ahead then, Conor. We'll leave it there, but thank you so much for calling in and sharing your insights. It's been a pleasure.
Okay, thank you very much, Anna.